Hello, I'm Sim. I'm a fitness expert, a finance geek, and a self-proclaimed foodie. And today we're here to talk about Dexcom and if it's the right time to invest in it. Dexcom is a medical device company focused on design, development, and commercialization of continuous glucose monitoring or CGM systems for the management of diabetes patients, their caregivers, and various other clinics around the world as well. It's headquartered in San Diego, and recently it's emerged to prove itself as a market leader in this space. They received the FDA approval for their first product in 2006, and since then they've launched various new products as well. CGM is a way to track your glucose levels in the day and night through real-time management. In September of 2023, the stock price fell by 17% just in a month due to the reduced risk of cardiovascular events for obesity drugs. Investors were really concerned about the possible wider applications of these obesity drugs and the implications on medical devices to manage diabetes. The company conducted extensive research on this and uncovered that patients taking GLP-1s use GCMs at twice the rate of patients not on GLP-1s. Essentially, the drugs and the devices were both working hand in hand. After the stock price hit a rock bottom on October 12th of 2023 at a price of $75, the company's stock has only been rising and has been in the range of $125 to $135, and I think it's only going to grow. On October 27th, the company announced its third quarter results, and I think it's only going to grow. Let's dive deep into their numbers and see if it's worth a buy. On October 27th, the company announced its third quarter results, and revenue grew by 27% versus the same quarter in the prior year to $1.3 billion on a reported basis and 26% on an organic basis. The US revenue growth of 27% and international revenue growth of another 27%. The full year revenue grew by 24% compared to the prior year to $3.62 billion on a reported basis and 24% on an organic basis. The net income also increased by a whopping 59% because COGS only increased by 30% and income from interest and dividends increased from $23.8 million to $135 million. If we were to delete that and consider the operating income, that also increased by a significant 53%, which is really good. The gross profit margin did decrease though from 64.7% in 2022 to 63.2% in 2023. Which was primarily driven by the increase in amortization of an intangible asset and price, product and channel mix changes. The company also saw US revenue growth of 23% and international revenue growth of 30% on a reported basis. During the 12 months ended December 31st, 2023, 2022 and 2021, no individual country outside the US generated revenue that represented more than 10% of their total revenue mix. In fact, the US market has had a constant share in their revenue of approximately 75%, but sales in the international market have been increasing extremely slowly though. The company sells their CGM systems through a direct sales model and through distribution arrangements that allow distributors to sell their products. 85% of their revenue comes from distributors and only 15% directly. I do see that there is a lot of potential to grow directly, but obviously the revenue is going to be coming from distributors recommending this product as well. The company plans to continue to pursue and support development partnerships with insulin pump companies and companies or institutions developing insulin delivery systems, including automated insulin delivery systems as well. They are also exploring how to extend their offerings to other opportunities, like including people with type 2 diabetes that are non-insulin using, people with pre-diabetes, people who are obese, people who are pregnant, and people in the hospital setting in general. Eventually, their goal is to apply their technological expertise to products beyond glucose monitoring as well. As a fitness expert, I think CGMs aren't only going to be used by diabetes patients, but I think there's a much bigger market for it. Glucose monitors are becoming extremely common today to track any individual's glucose spikes and overall well-being. The company's debt-to-equity ratio is 1.18, which makes it a tad bit risky, but the company has shown such strong performance and has a huge scope to grow as well, So I would definitely be buying it at a range of somewhere between $130 to $135. It's currently trading at $134, so I'm definitely buying it. The price target I see for Dexcom is an easy $148 to $152. However, if you are willing to take a little more risk, I do think over a little longer period, it does have the potential of even reaching $170 to $175. I think pharma companies that are using technology are going to reshape the entire healthcare, medical, pharmaceutical space, and I am all for it. The next company I'm going to be analyzing is Medtronic, so make sure you subscribe to my channel and see you next week.